Okay, guys, so thank you very much for joining today. Just give me one more second, please. Okay, perfect. So now everything is set up. Thank you very much for your patience. It's today our first time that we host these webinars directly on YouTube. Therefore, we had some issues with streaming it, but now I think it should be fine. Thank you very much for joining the webinar today. Today it will be about stablecoins, Libra and CBDCs. So it will be basically an introduction about all these different forms of money, basically, which have been or have appeared the last few years. And I especially welcome the students from the University of Bayreuth. They are having their first semester week again. So hi to the students from Bayreuth, and also to the students from the University of Applied Sciences in Augsburg, for the course Introduction of Bitcoin and Cryptocurrencies. Also very welcome to all of you. And of course, also welcome to anybody else. Cool. So yeah, I will today discuss stablecoins, Libra and CBDCs, which are actually all topics of their own. So yeah, I know that I could fill actually hours and probably days about these topics, but I do now have the quite hard task to discuss these topics in really just, hopefully 45 minutes. So I aim to have this presentation done in 45 minutes. And if you have any questions, we can have this, or you can ask them in the chat. And afterwards, I will answer the questions in the chat. Perfect. So yeah, maybe a very quick introduction about myself. My name is Jonas Groß. I am a research assistant, both at the University of Bayreuth, but also at the Frankfurt School Blockchain Center. So a think tank related to the Frankfurt School of Finance and Management, where we basically analyze all kinds of implications of blockchain technology, DLT, both for companies, but also for the macroeconomic. I'm here, related to this of my profession basically is also my PhD, which is at the University of Bayreuth, where I do my PhD about central bank digital currencies and stablecoins. So basically two topics, which we will also discuss today. Great. Besides that, I'm also co-hosting a podcast, Bitcoin, Fiat, and Rock and Roll. Some of you might know. And I'm also a founding member of the Digital Euro Association, but I will not discuss this in detail today. Cool. So let's not talk too much about me introducing myself, but let's focus on the topic. So it will be about stablecoins, Libra and CBDCs. And in the beginning, I will also very briefly discuss crypto assets in general. But first, let's go one step back and really talk about what basically money is. Because this is, I think, a pretty easy question, and most people think about a banknote, but others also for like digital monies on your bank account. It's basically all of it. So what money basically is, it has three features. And if money fulfills these three features, then actually people consider something as money. The first one is being a medium of exchange. This just means that this, basically form of money can be used for payments, obviously, for transacting at a specific point, or also digitally. The second one is that money is a unit of account. Okay, so something you basically calculate in. So, for example, today, if you go to a store, all the prices are denominated in euro. Therefore, euro is a unit of account. And the third one is basically a store of value. Store of value basically being able to transfer wealth over time. So money you earn, you basically want to have this, for example, available tomorrow. So what can you do? You can put money on your bank account and have a store of value. And if these three properties of money are basically fulfilled, the three functions of money, then you would consider something money. Great. So which forms of money do currently exist? And there are actually like two types or two kind of pillars of money. The first one is the so-called conventional forms of money. For example, cash, banknotes, bank money in the form of bank deposits, and also central bank reserves. And there are also new forms of money. For example, crypto assets such as Bitcoin, but also stablecoins and central bank digital currencies. And today I will not talk on these conventional forms of money because they are actually quite intensively discussed in the literature, but I will focus on the new forms of money, being crypto assets as Bitcoin as a first, then stablecoins and Libra as a second, and central bank digital currencies as a third. Great, so let's start with crypto assets. Here you basically see an overview about the 10 most prominent and most important crypto assets or cryptocurrencies we currently know. The most prominent, obviously, is Bitcoin with a market capitalization of 250 billion US dollars, so quite huge. This is clearly the number one. And second one being Ethereum or the Ether coin with a market capitalization of 44 billion US dollars here. But so you basically see a very large gap between Bitcoin and Ether. So Bitcoin is by far number one, and the distance to Ether is quite high. But also what you can see here is when you look at the third position, it's Tether. And Tether has basically here a price of $1 US. And this is why you consider Tether a stable coin, because this is a coin which is relatively stable in its price and has actually the US dollar as a backing. But I will address the stable coins later on. Right. If we talk about cryptocurrencies, it's obviously also interesting and relevant to know, well, how far are they used? So is this just a niche, or is this like a means of payment which is used heavily? And here you see basically some data by Statista about how far cryptocurrencies or crypto assets are basically spread over different countries. And this is quite interesting to see, because in some countries, for example, in Africa or in Asia, cryptocurrencies are really important. So here, Statista basically asked the people, have you ever owned or used cryptocurrencies for purchases? And here in Nigeria, we see 32%. I mean, that's like 1/3 of the people. This is really, really high. And also in some other countries, as South Africa, also Latin America, as Peru, for example, the share is quite high. In Germany, we currently have a share of 6%. This seems quite low. However, you also have to see that the last few years has actually grown substantially. So last year, I think it was 4%, basically indicating a 50% increase of the share. Okay, so this just to give you a feeling how predominant is. So in developing and emerging economies, crypto assets are obviously used more, but also here in Germany, 6% of the people basically have used crypto assets, like in their past. But what's the advantage of crypto assets? Why don't they use the national fiat currencies, but use crypto assets as Bitcoin instead? First one, this is more from a IT security point of view, is that you do not have any single points of failure. So what you basically have if you transact money with your bank account or via an app on your phone, you have a single point of failure, because there's actually one party managing all the transaction, also onboarding clients, etc. So if this party basically defaults or is malicious for some kind of reason, then you really struggle and could basically face financial losses. But this is not the case with crypto assets, because for Bitcoin, for example, there are thousands of different participants of nodes which actually govern the system. And this makes the system very resilient and quite secure. The second advantage is resistance to manipulation, because the cryptography, which is used for blockchain systems, makes it really hard to forge or to manipulate transactions. Therefore, this is another advantage which comes with crypto assets, because it's really kind of impossible, or maybe it's a very, very, very low likelihood that data or transaction data can be manipulated. The third benefit is peer-to-peer transactions. So for transaction in cryptocurrencies, you normally do not need an intermediary. So if you do a transaction via bank account, if you do a transaction on the weekends, it's really hard because it's really just transacted on the beginning of the next week and it's not settled immediately. And this is something crypto assets do. So even if Bitcoin is often criticized for just having like every new block of transactions every 10 minutes, if you consider like or compare this to the traditional banking system, it can actually be faster because you don't have any intermediaries or middlemen in between. The fourth aspect is about programmability and integration of delivery versus payment. This is a more technical perspective, but what this basically means is that that settlement of assets also against different other form of assets and money can basically be done in real time. So today, if we settle, for example, a stock, this takes really like up to 2 days until this is really finally settled because, for example, clearinghouses are integrated, so a centralized party. And with such blockchain-based means of payment, these settlement can happen instantaneously. And this, of course, lowers risk because less counterparties are involved. Therefore, counterparty risk declines. And the fifth feature is censorship resistance, as not one single party is basically managing the whole form of money and basically includes people and decides who can have access to the system or not. It's now kind of censorship resistance because no individual can be excluded from the system. And this is basically, from my perspective, the most important benefits of crypto assets, even if there are, of course, way more. And there are, of course, also risks. But the time we will not address this today. Great. So this was just a very brief introduction to crypto assets because they are very relevant for stablecoins now. And now we turn to stablecoins. And I would say stablecoins are kind of evolution of traditional crypto assets, because what one could have seen in the last few years is that the price and the exchange rate of Bitcoin, for example, in dollar or in euro, was very, very volatile. And actually on one day, it could be possible that the price declines or increases by partly 5 or 10%. And this is, of course, a reason why people do not really want to use this form of money for their daily transactions, and also that they do not want to use their money as a store of value, or also companies for their business processes. And this is an advantage, or this is a topic stablecoins address, because stablecoins are crypto assets which have a low volatility. So they aim to overcome the high volatility of currently existing crypto assets by exhibiting a stable value relative to a reference basket or a basket of assets. So what this basically means is that a stablecoin is backed by something. It can be, for example, fiat currencies as euro, US dollar, yen, whatsoever. It can also be real assets, for example, gold, in theory, also real estate, but also financial assets as government bonds. So it can really be a lot which is backing, but there is something actually behind the coin which is backing it, so making it actually more stable, that it is not fluctuating that intensively. Good. And then I turn to Libra, because Libra is currently the most prominent example of a stablecoin, and this has kind of clearly shaken the system and has also woke up politicians, central bankers, and policymakers. And due to this high relevance, I also focus on Libra today, because this is a very, very interesting and remarkable project and might also see daylight in just a few years. Okay. Good. And to start, or to get a feeling why Libra can be used or can be beneficial in some dimensions, it's good to really look into the white paper. So this is a concept paper about the Libra project. This has been published in 2018 by the so-called Libra Association. I will explain the members of the Libra Association in just 1 second. And here it says that in terms of better financial inclusion, many more people should have access to financial services and to cheap capital. And from this sentence, you basically see the first 2 goals of the Libra project. The first one is basically increasing the access to financial services, so being an increase for financial inclusion. And the second one is to cheap capital. So therefore, it's the goal to decrease transaction costs. And this is like the 2 official goals from the Libra Association. So it's primarily like social and also economic issues the association wants to address. And these 2 goals should be reached through basically reached through a currency built on a secure and stable open source blockchain, Libra blockchain, backed by a reserve of real assets, the so-called Libra reserve, and governed by an independent association, the so-called Libra Association. So these are basically the three pillars of the project. First, technology, the Libra blockchain. Second, the backing, the collateral of the stablecoin, the Libra reserve. And third, the Libra Association as the basically managing entity behind this project. Okay, so let's again come back to the Libra Association. This is the association behind the project. It's headquartered in Switzerland and consists of 27 members, including Facebook through its subsidiary Novi. So this indicates that this project has been initiated by Facebook through its Novi company here, but you also see in the picture that it's not just Facebook. So it's 26 other members, and this includes, for example, Lyft, Spotify, Uber, so really companies all of you know, but also other payment companies, non-profit companies, blockchain companies, venture capital companies, also from the telecommunication sectors. So you see there are lots of different parties from different sectors which support the project and which really govern the project here. Let's now get an insight into the Libra ecosystem. So how does it work? If you want to transact in Libra as a client, how can you do it? And this is illustrated in this figure here. So assume you are client A and you want to send some kind of Libra money to your friend, which is here depicted as client B. So what you basically do is you pay fiat, so for example, the euro or US dollar, so fiat money, to so-called virtual asset service provider, so-called VASPs here in the figure. And this is, for example, a wallet service. So think about you have your euro banknote and you basically put this onto a wallet on your phone. And then you have basically some money available at this virtual asset service provider, which is, for example, one wallet. Then this company, which organizes the wallets or has set up the wallets, uses the fiat currencies and provides this to so-called designated dealers. And what the designated dealers do is they go to the primary market and to the secondary market and buy financial assets. Okay, and this is what makes Libra a stablecoin, because Libra is backed by financial assets. These assets are bought by the designated dealers. This is the so-called Libra reserve and is then deposited with the Libra Association. And only if a specific amount of financial assets is provided to the Libra Association, then the Libra Association basically mints Libra. So this is why Libra is a stablecoin and is 100% backed by financial assets. And only if these assets are provided by designated dealers, the Libra Association mints Libra coins. All right. And after the Libra Association has minted the coins, they are forwarded to the designated dealers. They forward it to the virtual asset service providers. And these virtual asset service provider then forward Libra to your wallet, and not to your wallet, but to the client. Okay, so in the background, you see it's a complex which seems quite complex. However, if you think of a current payment process, there are so many counterparties involved. So very often for settling of the money, for example, it's really like 10 to 20 different parties. So here you basically have like 3 or 4 parties. It's still more than obviously like having just your transaction partner B, but it's way less than in current digital payment infrastructures. Great. So until now, I just said that the Libra is basically backed by financial assets, but I didn't define which kind of financial assets are used basically as collateral. And in the white paper of the Libra project, actually the second one, so the adjusted white paper, which was basically published in 2020 at the beginning of this year, here it was stated that the Libra reserve will consist of more than 80% government bonds and less than 20% cash or cash equivalents. So what you see that the financial assets in the background are government bonds here. So as I said, for stablecoins, this can be gold, this can be real estate, this can actually be anything. And for Libra, it's primarily government bonds with more than 80% and just less than 20% with cash. Okay, and if these fiat currencies, or if these government bonds, of course, denominated in fiat currencies, are provided to the Libra Association, then Libra tokens are minted as a response. And I'm really stressing this because this is essential. So Libra is 100% backed by financial assets, and this makes Libra a stablecoin. Okay, and actually, if I talk about the stablecoin, it's not just one stablecoin, it's 2 different stablecoins, which also have quite different use cases. So if you think about the Libra reserve again, with basically consists of 80% government bonds and 20% bank deposits. On basis of this Libra reserve, so-called single currency stablecoins are issued. So think, for example, for the euro area, there are in the Libra reserve 80% euro area government bonds collected and 20% euro. And they are basically collected. And basically, you can think of that they are put somewhere in kind of a storage or an account. And then on basis of this Libra reserve, so-called single currency stablecoins are created. For example, the Libra euro. Okay, so euro collateral will be basically transferred from a client perspective into basically a Libra euro here. And in the US, this is kind of similar. You have US government bonds and also US bank deposits or US cash equivalents. And there is a US dollar Libra issued. And this, of course, also holds for other jurisdictions. Okay, so this is basically that these single currency stablecoins are backed by government bonds denominated in this specific currency. And as a second layer, there is the multi-currency stablecoin, the so-called Libra coin. And this is basically now backed by the different single currency stablecoins. So for example, think about the Libra coin, the multi-currency stablecoin, which is backed, for example, by 3 units of the Libra euro, 5 units of the Libra US dollar, and then, for example, 2 of the British pound. So this is basically a mixture of all these single currency stablecoins. And this can be quite interesting. For example, for developing and emerging economies, it's really desirable to have a stable means of payment, which is also like diversified. So people do not want to rely on, for example, the euro there, because the euro still can be volatile. But if you have a means of payments which consists of the euro, the US dollar, the pound, maybe also the yen, this is like more stable for developing and emerging economies. And therefore, this multi-currency stablecoin is, from my perspective, more expected to be used in developing and emerging economies. Good. So this was basically, the main important information about how the technology, how the ecosystem works, and how the stablecoins are structured. Now I will briefly discuss the key benefits and also the key risks of Libra. So the first benefit is that it will significantly reduce transaction fees for cross-border payments. So looking at currently at World Bank data, we see that cross-border payments costs on average 7% transaction fees. And this is, of course, really a lot, because think of the really poor people in developing and emerging economies, where also a worker is sending money back home to his family. And if now the payment providing company charges 7% fees, this is really incredibly high. And Libra will basically be a means of payment which will definitely be cheaper. We do not know if this will indeed be zero, but it could be basically close to zero regarding fees. The second one is that it provides a stable means of payment and store of value. So this is, for example, what I think the multi-currency stablecoin is for, because, as I just explained, it consists of various different fiat currencies and is therefore quite diversified and therefore quite stable from a perspective of very often quite volatile currencies in developing and emerging economies. Another advantage is financial inclusion. So currently there are basically 2 billion people worldwide excluded from the financial system, according, again, to data by the World Bank. So they do not have access to financial services, be it credit being a digital money scheme whatsoever. But 60% of them own a phone and 30% of them have constant internet. And then, of course, this makes a strong use case for using a phone for a means of payment, because therefore you can easily integrate like 30% of 2 billion people, bringing them to the financial system. And this is also something Libra intends, because later on you would just basically have to have a wallet, and then you can easily transact money with fiat. Okay, we do not know this yet how exactly it looks. As I said, Libra is not live yet, but this is something which will become relevant. And as a fourth point, Libra will also be digital programmable money. So here, this is the aspect of delivery versus payment. I explained in the beginning that this basically is a DLD-based means of payment. So if you have a use case where you need, for example, a blockchain, you can now use, in theory, then, if it's live, of course, Libra to have form of money which is also DLT-based. And this leads to the fact that no system breaks, for example, occur, and that this is in the end more efficient and also decreases risks and also decreases costs. And this is why such a digital programmable form of money can be interesting. It also generates new business models, but I will not discuss this now. We can do this in a Q&A if you're interested. Besides this benefits, there are also risks one should, from my perspective, not neglect. So the first one is that it basically shifts power from the public to the private sector about, basically like providing payment infrastructures. Actually, it's not just the private sector, but it's private sector non-banks. Because currently also banks have a quite important role, but they are also, of course, from the private sector. And this is something which is perceived as not really desirable, at least from most people, because this could put banks under immense stress. And it's also the question if like fintech companies as Facebook or then also as Spotify, Uber should, or like tech companies should really be involved in like having an own monetary system. But I think this is more an ideological point of view. The second risk factor is data privacy. And I think this is a topic which is very relevant and also for Germans basically of very high importance, because the financial data are available to the members of the Libra Association. This is just how a digital payment infrastructure works. Because if you think about your bank account, the bank has all your information about your transactions, when you transacted, and how much you transacted. Because it has to say, well, this transaction is fine. So this is just very natural. And this is, of course, also the case when you have a blockchain infrastructure. And here it's actually even more severe because you do not have just one party which has insights into your data, but you have more parties. And in the Libra case, it's 27. The Libra Association confirmed last year that we will not use the data for business purposes, but we will see if this will in the end indeed be the case. But this is definitely a risk factor. This has to be addressed, and also regulators have to address this. The other aspects are mainly related to systemic risks and financial risks. So the first one, if in case Libra gets really, really large, it can provide like issues for financial stability, can threaten financial stability, because it, for example, runs to Libra could occur. Or if Libra, for example, struggles for some kind of exogenous reason, then there is no lender of last resort. So it's not the case that with banks, that if a bank struggle, kind of central bankers or governments step in, but very likely for Libra, nobody would step in. And this could lead to financial losses of the end user in the end. And then there are also financial risks, for example, default risks if government bonds default, also exchange rate risks, obviously for the multi-currency stablecoins, also liquidity risks. And another one, which is also quite interesting and also quite relevant for the ECB, is the loss of monetary sovereignty and monetary policy efficiency. Because what the ECB just in a few weeks in their report about the digital euro stressed was that they also potentially want to issue their own digital means of payment as a reaction to having stablecoins becoming very prominent. And this would basically then lead to the fact that if Libra was used on a very high scale, that fiat currencies, for example, a form of bank money, but also with cash, basically decrease in market share. And this would then have negative implications for the role of the central bank and also for a monetary policy efficiency here. Right. So this was basically the Libra part here. Maybe to have a first summary about it. From my perspective, it's not yet clear if it's really more positive or more negative. So I think it has really great potentials, but it has also very high risks, which are not addressed yet. So Libra is not yet live. They might be introduced, I guess, in 2022. Why just in 22? Because there was actually a regulation proposed, a regulatory guideline on the European level, the so-called MiCA regulation, the markets in crypto assets regulation. And just a few weeks ago, basically, it was stated that Libra is not allowed to be launched before this legislation is basically introduced. And this will, from today on, take approximately 1.5 to 2 years. And therefore, from my perspective, it seems unlikely that Libra will become a reality before that date. Great, let's now turn to the last form of money today, which is the last pillar of our new forms of money we kind of observe. And this is central bank digital currencies, so-called CBDCs. So what is a central bank digital currency? It's a digital currency issued by a central bank, which is legal tender in the respective economy. It's from a perspective of the CBDC claim against the central bank. So it's central bank money. And this is what makes the CBDC distinct from, for example, bank deposits, as you know them, or also e-money, because the CBDC is a form of central bank money, is a claim against the central bank. And this does not seem of so much relevance in time of financial stability. But if you have a crisis or financial institutions potentially have issues, then this will definitely be a difference, because banks potentially could default in theory. And this makes bank money more risky. Okay, so now we are back again. Sorry for that. Yeah, we were still with CBDC. So what the main aspects of CBDC basically are, or the main benefits. So the first one being, besides monetary policy efficiency, also having an increase in financial stability, so that basically risks is decentralized and is not just basically be allocated to just one or a few commercial banks, but also to the central bank. And this makes the financial stability or the financial system more stable, and therefore increases financial stability. And there are also other benefits, as payment efficiency, for example, as also a CBDC can decrease transaction costs a lot. And also payment safety, which can be increased with a CBDC. So what are potential risks of a retail CBDC? Also here we have financial stability. So it's quite interesting because it's not just that financial stability can potentially be threatened, or cannot just be increased with a CBDC, but can also be threatened. Why can this be the case? With a CBDC, it can actually be the case that digital bank runs will happen, or also a disintermediation of the banking sector could in theory take place. So what does this mean? This basically means that large shares of money are basically allocated from banks to the central bank. And this can threaten banks' business models, also funding costs. And this is why a CBDC, as basically a riskless form of money, is basically now also available for the households, and they can substitute their bank deposits with CBDC here. All right, and the second potential risk, also something which was related to data privacy before, as in the Libra case, it's that a central bank can store data. So as with every digital payment system, it's the case that data have to be available to the governing body, which is here the central bank, and potentially the ECB has the data. And this is a clear benefit or a clear advantage of cash, because with cash, you actually have cash as an anonymous means of payment. So the central bank cannot look into transaction details of cash, but the central bank can with CBDC. And this is something which has to be addressed. There are also cryptographic features, how you can enable private transactions, but this is still too far. Or it's still undecided if something will be implemented in this direction. Okay, and the third potential risk is remote payments, so that you can also enable transactions without internet. This is also very important because with cash, for example, you have the possibility to transact also without internet, but without cash, so with bank money, you don't. So you need an internet connection for that, and also the bank needs an internet connection for that. And this is also an issue for a CBDC, but also here there are already some proposals on the table how to prevent this. And the fourth point is about cybersecurity. So basically that the system should be sufficiently tested, of course, and used, because it's a really a tremendous new payment infrastructure which is now generated. And if there are issues related to cybersecurity and IT security, this has, of course, also strong implications for the whole system, and it's something which has to be tested sufficiently, and is really one of the pain points here of CBDCs. What are different dimensions here? A CBDC is not equal to a CBDC. So there are differences about remuneration, access, storage, distribution, and also technology. So about remuneration, it can be the case that a CBDC is interest-bearing, meaning that it provides an interest income to the holder, or it can also be non-interest bearing. So basically meaning that, similar to cash, you do not get any interest if you hold this form of money. The second one is access. So you have wholesale versus retail CBDC. So wholesale CBDC basically being that this is essential for a central bank money, which is available only for banks. But retail CBDC here, CBDC is available for everybody. So it's actually for all the clients, for companies. So this is actually, the CBDC actually we refer to, and also the media refer to when they talk about CBDC. The other dimension is storage. It can be stored on accounts and tokens. I will not discuss this in depth. If you're interested in that, we can do this in the Q&A afterwards. And we also have the distribution here. So, for example, a two-tier system or a one-tier system. The one-tier system, the central bank would directly distribute the CBDC units to the end user. And with a two-tier system, basically the central bank would distribute the CBDC units to the banks, and they would distribute it to the end user. Okay, so this is like a system we also see with cash, because cash is basically provided by the central bank, and the bank distributes cash to the client. And this is something that we might also see in a DLT system here. Right, and the last dimension is about technology. It can be based on blockchain, but it can also be not based on blockchain. This is important because in the public discussion, very often CBDC is assumed to be blockchain-based. This does not have to be the case. but it has, or it can have advantages if it's based on DLT. So just very briefly, if we look at current CBDC projects here at the infrastructure pillar, so the yellow one, we see that currently 6 CBDC projects are based on DLT, 2 are based on DLT and centralized infrastructures, then like 2 on centralized, and the rest, like more than 20, is undecided. So it's really too early to say if we will see a CBDC which is based on blockchain, but currently most or more projects consider or use DLT than not. What are benefits? Just very briefly, security. Again, you do not have a single point of failure because the system is basically distributed to different parties. Therefore, if one party fails, you don't have any issues. Also, data privacy. There are quite interesting cryptographic tools as zero-knowledge proofs or ring signatures, which can be used in DLT systems. So this can increase privacy of a CBDC, which is a very important aspect. And you also have higher efficiency through faster and cheaper payments. This is, again, the aspect I had with delivery versus payment. This can be increasingly interesting. And also the programmability of money we had, and also enabling trust. Because if you have a DLT, you do not necessarily have to trust the central bank. You just have to trust the protocol. And even if probably most people do trust, for example, the ECB in Europe, it doesn't have to be the case that this is also the case in developing and emerging economies where central banks do not have the same reputation as here. Okay, lastly, right on time, let me briefly conclude. It's really clear that the digitization of the monetary system is progressing. So we see ever more digital forms of money. Currently, we have 7,500 different forms of money. It's actually increasing like weekly, or mostly actually also daily. Also, every month currently, new CBDC projects are proposed and are basically announced that they will, central banks look to this topic. So it's, for example, the last have been, for example, Russia, or also South Korea. And crypto assets and stablecoins will not disappear. I mean, why will they not disappear? The first one is, I mean, it's just a blockchain, for example, Bitcoin. You basically cannot get the blockchain to stop. So it will just continue existing. But of course, the question is if it will be used. And from my perspective, I think it will, because in developing and emerging economies, crypto assets and stablecoins have a really clear use case. And also for the euro area, we have a use case, from my perspective, for crypto assets or for Bitcoin, and being something related to digital gold, so to a store of value, which is relevant in my personal point of view, will also increase in importance the next few years and maybe also decades. Also, central bank look more into CBDC. It's also the ECB. So I haven't talked about this. The ECB will decide until mid next year if a CBDC in the euro area will be issued. So if a digital euro will be introduced, okay. So also the ECB has this on the agenda, but has not decided yet if it will indeed launch a CBDC. But it decides, so it will also probably take a lot of more years, maybe five years or more. So if we look, for example, in China is one of the CBDC pioneers. And they have started in 2014 with basically analyzing CBDC. And it took now really 6 to 7 years to get it now in a test mode. So this really stresses it takes time, and we will not see a CBDC in 1 or 2 years. This is very unrealistic. And besides China, another pioneer are the Bahamas. They have actually introduced the first CBDC 2 weeks ago worldwide. So they are really the first. It can be used in the Bahamas. But of course, also here you have to admit that Bahamas obviously are way smaller than the euro area, do also have a way less prominent role as a digital reserve currency as well. So yeah, this is really why this is a topic or a project which is interesting, but should not be considered one-to-one to this one. Right. Okay, so also another aspect to Libra. Libra, I also mentioned this will not be introduced will not be introduced before 2022, because this is basically due to the MiCA regulation, because this is a regulatory framework which has been rolled out previously and will also be, or Libra will just be allowed to be introduced as soon as MiCA is live. Great. So that was it from my side, actually. I'm very happy and looking forward to your questions. You can just ask them on the chat. If you find this interesting, you're very happy, of course, very welcome to follow me on LinkedIn, Medium, Twitter, the ResearchGate. You find the links here. So also, if you have some questions you want to address to me, please reach out to me. I know that, or I have seen that we can just basically insert questions into the chat. If you have a YouTube account, if you don't, you're very happy. I'm very happy to also answer your questions bilaterally. So you can just contact me via LinkedIn, Twitter, email, whatever is best to you. Perfect. So thanks for your attention. That was my presentation. And I now go to the questions. And so again, sorry for the technological issues. We tried this the first time streaming over YouTube. So great that you really followed us to the end, and we were very happy that we solved these issues still during the session. Now I do not see any questions in the chat. So if you have some you can insert them now. I will still wait maybe 1 or 2 minutes. If there are other questions, and if not, you are also, as I said, you're very welcome to reach out to me bilaterally via LinkedIn, via Twitter, whatsoever, and then I can also answer your questions there in case you are interested. And maybe also one question, or maybe one aspect I didn't address. This was also that if you talk to central bankers, it's really also not clear if they see, for CBDC, if they really see a necessity to introduce it. So the ECB, for example, defines scenarios when a CBDC should only be issued, for example, if, for example, risks from Libra or a foreign CBDC are kind of too high, or if also, for example, from monetary sovereignty point of view, so that the ECB basically has like the power, or can increase its monetary policy efficiency, and is not really threatened by Libra. So what the ECB basically did, I think this is also something just interesting for you guys, is that it defines scenarios. And if these scenarios materialize, then we have the situation that the ECB will decide to issue a CBDC. And then they will actually, they open a consultation phase. So for example, if you read the paper and want to tell the ECB your perspective on the paper, you can do this. So it's a public, thing in a public consultation, so everybody can provide feedback to this. And as I said, until next year, it's not really clear if it will indeed be introduced. But as I said, next year we will know more, and then I think it will still take, as I said, more than 5 years until a CBDC is really live. Okay, for the people not having a YouTube account, I also got a few questions on LinkedIn. So the first one is, will Facebook really have all the transaction data, or have access to all the transaction data? And this is the question. So I mean, if you look into the blockchain system, it will be a kind of Byzantine fault tolerance consensus mechanism. And what this basically means is that not every party is confirming transactions like at any time. So it will kind of be a rotation in the validation partners. Therefore, Facebook will not have all the data because it's just one out of the 27 members of the Libra Association. But what Facebook will have is it will have the data from some of the transactions. But here again, I have to say it's not Facebook, it's the subsidy, it's Novi. And here I think there will some rules be implemented that these data are not allowed to be used in the context of, for example, business purposes. Right. Another question was, for a CBDC, do I really need my account at, for example, my local bank? So in Germany here, the Sparkasse. And I would say yes, you do, because a CBDC is, it can be used for transactions. It also will be used for transactions. But for example, what you very likely cannot do, you cannot get loans in CBDC. So if you want to get a loan, you have to go to your bank or to some other financial institute to get the loan. And this will not be possible with a CBDC, because the central bank will really not go into the business of providing loans. The central bank will rather just provide the infrastructure for the CBDC payments. And it's also possible, this is what the ECB discusses, is that a CBDC might be restricted. So it could be the case that you can just hold and transact CBDC up to a specific threshold. And this is also something which will, of course, limit the substitution effect from a CBDC to bank accounts. Right. Another one is, will we basically also have cash in the future? I think we will. So the ECB also mentioned in their report that they did not, or they will definitely not forbid cash. This is definitely not the agenda. And I think we will see cash as long as it's demanded by the clients. But what we also see in use cases, or also in countries, for example, in Sweden, is basically that cash is basically driven out from the market. So it's not because of the central bank forbids it. It's really more about that people don't want to use it, and also merchants don't want to use it because it's way more expensive. And therefore, there can be a market force kind of driving out cash, but it will definitely, from my perspective, not be a central bank decision to really forbid the cash. Right. Another question is, are there any euro stablecoins out there? This is actually a good question. I didn't address this today. And yes, there are. So there are currently lots of stablecoins out there, also in euro. For the euro, the most prominent, for example, I guess, is the Stasis euro, which is already out there. And there are also quite a few others. So if you go to CoinMarketCap, which is the main source, you can basically see that there are some out there. But it's definitely true that that the most stablecoins are denoted or denominated in US dollars. Then a question in YouTube: what's the objective of the euro when ECB has not decided to go yet? I mean, it's different benefits. So the first one is really about basically having monetary sovereignty and basically decreasing the dependence on other CBDCs or also on Libra. This is, from my perspective, a very, very important aspect. And and this is definitely I think the main aspects. But there's also monetary policy considerations, and if you actually want to get more insights, that the ECB reports really lays out the goals from a CBDC. So there it's really quite profound, what basically the CBDC can be used for. And okay, I also see you mean a Banque de France. I think this is a completely different use case, because they will basically consider and talk about wholesale CBDC and not a retail CBDC. So this is something I didn't focus today, but it's mainly about payment efficiency here. Right, then I have one last question also via LinkedIn. Are we entering into a coming currency war, CBDC versus private digital money? I mean, I wouldn't phrase this as a war. I would rather see this as a competition, because banks now also have to be innovative, because there is a CBDC, so an additional form of money people can use. And this is therefore, this is a competitor, but I think I wouldn't say a war. It can more be like a currency war from a country-wise perspective. So that, for example, the ECB wants to follow the, for example, like the Chinese central bank. So this is basically about international power. So which currencies will be used as stores of values. And I think there it really can make a difference who's first, actually. Okay, so that's it question-wise. Thank you very much for your patience. Sorry again for the technical difficulties we had. I was very happy to sharing this insight with you. If you have any questions, you're very happy to reach out to me. And yeah, have a great day, a great evening, and thanks again. Bye-bye.